Good day, students. I will be doing Chase close cooperation exercise, which is number 8 of the close cooperation exercises that you have in your handout. Below are balances at the 28th of February 2007 taken from the accounting records of Chase close cooperation, and we are given a trial balance starting with the members' contribution, retained earnings. These are opening balance, general reserve 78,000 rands, that is also opening balance. Just browse through the expenses. We'll cover all of this when we do the income statement and the other requirements. If you see there, we have an interim profit distribution to members, and whenever you see interim profit distribution, there's a high possibility that there will be a final distribution of the profit. So now we must have a lookup of the final distribution, because interim distribution is an indication that cash was distributed in the middle of the year, being after 6 months during the current accounting period. Then after we have our normal expenses, as we know, selling and distribution expense, salaries, then we have administration, we also have finance cost there. So we'll cover all those based on the requirements. Then now under the trial balance, they say the following additional information needs to be taken into account. And we have number 1 that tells us that the members of Chase close cooperation are Cheddar, Edem, and Gautam. So now this close cooperation has 3 members who each have equal interest in the close cooperation. And Cheddar and Gautam contributed 180,000 rands each. So now these 2 members contributed 180 each. Then the third member, Gauta, contributed 120,000 rands to the close cooperation. So now if you see in the trial balance, we have an amount of the members' contribution that appear there under the opening balance. And that opening balance is made of the contribution of 180,000 rands for Chase and 180,000 rands for Edam, and the 120,000 rands that was contributed by Gauta. And if you sum the 3 amounts, it should give you the opening members' contribution of 480,000 rands. So now we may continue further with the reading of the additional information. Additional information number 3 tells us that the following balances or the following amounts were paid. Take note of the word paid. The following amounts were paid, underline that, paid to members. So now that means this is outflow of cash from the close cooperation paying the members of the close cooperation. And this occurred during the financial year. And it further says in the 4 corner brackets there that already taken into account in the above listed balances. Let me just give you one scenario for this one, or 2 scenarios. In the trial balance, we have salaries amounting to 108,900. And under adjustment number 3, we have a salary of 72,000 rands. So now if this line tells us that these payments that were made by the close cooperation to the members were already taken into account in the above balances, it means this 72,000 rands is already included in this 180,000 rands 900 in the trial balance. So now it means when we do the income statement where we have to account for the total salaries, we don't have to add the 72,000 rands because it was already taken into account in the above balances, being in this case salaries of 108,900 rands. And secondly, to just go again on that, we have an amount of the interest, and we know that interest is in this case paid on a loan that was from a member. So now the closed corporation will have to pay the interest on that loan. And we can see that the interest which was on a loan from member Cheddar is 10,800. So now if this transaction tells us that the above amounts, that these transactions were already taken in the above balances, it indicates that the 10,800 is already included in the interest that was paid during the year, which is interest paid on loan. So now that interest paid on loan is inclusive of this 10,800, and it is also inclusive of the interest that was supposed or was paid on this 18% long-term loan, which amounted to 72,000 rands. So now the interest on that loan is already covered in this interest of 19,440. So as well as the interest that was paid to member Cheddar of 10,800, it is already taken into account in the above balances, as this statement states that. So now I just wanted to highlight that so that we are clear moving forward. So now when we do the income statement with regard to salaries and with regard to the interest paid or finance cost, we don't have to add anything because everything was already taken into account in the balances that we see in the trial balance. Then after number 2 says that the interest of 9,600 was received from Adam during the year. So now it means during the year Adam gave money or paid the closed corporation interest on the loan that was given to him maybe during the year or last year. So now this will be recorded as interest income or as inflow of cash to the closed corporation. Then after now we have number 3, and number 3 says provide for the taxation expense of 91,560 for the current year, and it says ignore STS, meaning secondary tax on companies. I cross that with a red line indicating that you don't have to ignore that because it does not exist anymore. We don't have secondary tax on companies, so you have nothing to ignore because nothing exists with regard to the secondary tax on companies. Then now adjustment number 4 or additional information number 4 says provide for the final distribution of 57,600 to members. Remember I said whenever there is interim distribution, there is a possibility of the final distribution. And there we had an interim distribution of profit to members which amounted to 57,600, and this took place during the year, normally in the middle of the year. But now at the end of the year there was another distribution of 57,600 to the members. So now we have to add the two amounts to get to the total distribution for the current accounting period. So now if you add the two, I'm sure that should give you an amount of 115,000 rands, 200 rands, 15,200. Then now we'll see that, don't worry, we have number 4 where they say provide for the, okay, we have done that. We have number 5 that tells us that the members decided to transfer another 12,000 rands of profit to the general reserve. Remember, whenever an amount is transferred to general reserve, it means the part of the profit will not be distributed to, is the part of the profit that will not be distributed to the members of the closed corporation. So now we have to take that from the retained earnings column, or from the retained earnings, or from the retains of the business, and we transfer that to the general reserve account. Then after now we are required to take the above information into account and prepare the following for Cheese Close Corporation for the period that ends on the 28th of February in the year 2008. Now we have to answer number A, or do requirement number A, where we are required to do the statement of comprehensive income, Number B, the statement of changes in equity. And number C, the note on a transaction with members. So now we have to do the three requirements and will be done immediately after that. So now let me start as required with the statement of comprehensive income being the income statement. So definitely our income statement amounts will come from the trial balance. So now we have to do our income statement, and I've already just did the rough draft of the income statement only for the heading. And we know that income statement starts with the sales, and the amount of the sales comes straight from the trial balance. And in the trial balance we have the amount of the sales as 1,304,700. So now we record that 1,304,700. 1,304,700. Then after we subtract our cost of sales, which is the cost of selling the product. And the cost of sales are given again in the trial balance. There's nothing to add, either to subtract. Cost of sales amount to 652,350. So now we have to record that 652,350 as the amount of cost of sales. 652,350. And after you have subtracted the cost of sales from the sales, then we get to the amount called gross profit. And gross profit is 652,350 rands if you do your calculations accurately. Then after we go straight to expenses, because in this exercise we did not have other incomes. So now under our expenses we have just few expenses covered in the trial balance. In the trial balance we have selling and administration expenses 480,645. Selling and administration 180,645. Then we record our selling and administration for that amount. Selling and administration. Selling and administration expense. This is 180,645. I think I'm still correct. 180,645. Yes, it's 180,645 rands. Then the next expense that we have to account for is the salaries. Remember, the interest will be recorded after the expenses, and that will have to be recorded as a finance cost. So now we only have to take the salaries that amounted to 108,900. Remember, this amount of the salaries is already inclusive of the 72,000 rands of the salary that was paid to member Gauta during the current year. So now we record our salaries. Our salaries as 108,900. Then we record our salaries in the income statement. 108,900. Then after we record the last, which is the administration expenses. The administration expenses 75,855. Then we record administration expenses. Administration is 75,855 rands. Always expenses must be in brackets. Make sure that as you record them, you put them in brackets, because you students might forget sometimes, and sometimes you can get penalty for not writing expenses in brackets. Then we have a total of the expenses as 365,000 rands, 400 rands. 365,400, that is our total expenses. Then after, remember this is close corporation, then after in the close corporation we'll have investment income. We will have investment income. And under the investment income, we record all the incomes that we had. If there were dividends income, or if there was any interest income, we account it for there. And in this case, we did have some incomes received by the close corporation. There was a dividend received for 9,000 rands, and there was also interest that was received from Adam that amounted to 9,600, and there is no other income that I see from the trial balance. It's all the assets, liabilities, and expenses. So now we must start recording the dividends of 9,000 rands, then after the interest received from Adam of 9,600 rands. So now we start recording dividends that the close corporation received, and we record that as dividends received, and our dividends received amounted to 9,000 rands. Then after we record interest that was received, and we write that as interest received, and interest received amounted to 9,600 rands. Remember, these are the incomes indicating inflow of cash to the close corporation, and if you add the two amount, it should give you 18,600 rands, and they must be without brackets because these are the inflows of cash to the close corporation. Remember, this is a heading. I normally prefer to underline it. Then after we do the next expense, and the next usual expense will be a finance cost. The next expense will be a finance cost. And remember, a finance cost is the interest expense. So now under finance cost, there was interest that was paid. There was interest that was paid by the close corporation. Interest paid by the close corporation, I think it was 19,440. I'll just have to confirm that soon. I think it was 19,440 rands. In the trial balance, there was interest that was paid there at the bottom. Interest paid 19,440 rands, just for you to get a full view. There is 19,440,000 rands, which is the interest that was paid by the close corporation. So now we record that under the finance cost. Then from there we get to the profit before taxation expense, because we have to account for the tax. Profit before taxation, or profit before tax. Your profit before tax should give you an amount of 286,000 rands, 110 rands. Remember, your profit before tax is your gross profit minus expenses of 365,000 rands 400 plus 18,600 of the investment incomes, then after minus 19,440 of the finance cost. That should give you 286,110 rands. Then after we account for the taxation expense, then we just say taxation, and our taxation, I think it was given in the additional information. The additional information told us how much is the amount of tax that we must account for. That was adjustment number 3, where we were told that provide for the taxation expense of 91,560 for the current year. So now that is the expense that we take into account. 91,560 is the expense for the current year in terms of tax. 91,560 rands. And after you have accounted for tax, that should give you profit for the period. Profit for the period, or profit for the year, if you want to call it like that. The profit for the period should be 194,550 rands. That should give you that amount. Now from there we can do the second requirement, and the second requirement was to do the statement of changes in equity. Remember, this amount will have to be recorded in the statement of changes in equity. This amount of the profit will go to the statement of changes in equity for the closed corporation. That will be the profit for the period, or the net profit. So now in doing the statement of changes in equity, I've already completed a table for you, and there on top we can write statement of changes in equity, statement of changes in equity for the year ended 28th of February 2008. Then after, now we start with the opening balance being on the 1st of March 2007. And our opening balances, remember, we have capitals that were contributed by the members in the previous accounting periods. And I have highlighted that there are 3 capitals that we had for these 3 members. Each member had its own members contribution, or member contribution. So now these are the 3 members contribution that we have, that were contributed by the individual members. So now this was the contribution and the opening balance of the first member, second member, and the third member. However, in the statement of changes in equity, I'll just record one amount as the sum of 480,000 rands, which is the opening balance of the members' contribution. So now I am not going to split the members' contribution into 2. I'll just give you one summed up amount. Then after we go to the second opening balance, where there is revaluation reserve, please take that into account. But if you don't have it, do not worry about it. General reserve, we have an amount of general reserve, if I still remember, as 78,000 rands. In the general reserve, we have 78,000 rands. There is the amount of the general reserve, 78,000 rands. Please make sure that you assume this to be an opening balance, and this is also an opening balance 2007. Remember, the accounting period end February, so it always start in March. Then after, we also have the opening balance of the retained earnings that sit to be 39,390. So now let us account for that 39,390 as an opening balance for the retains of the business on the 1st of March 2007, which is 39,390 rands. And if you add those 3 amounts, they should give you a total of 597,390 rands. Then after, we record a profit for the period, and I told you that a profit for the period will come from the income statement, and the profit for the period will be that amount of 194,000 rands 550. 194,000 rands 550. It comes straight to the statement. So now we record that under the retained earnings as 194,550. 194,550. Then it goes under total 194,000 rands 550. 50 rands. Then after we go to the second part, remember these line items are the ones that are normally in the or recorded in the statement of changes in equity for the closed corporation. And now the next one is additional contribution or additional members contribution, and there was no contribution by the members during the current year. Then after transfer to general reserve, I think there was a transfer to the general reserve, and if my memory serves me, that amounted to 12,000 rands. Let us go and check it together. Under adjustment number 5, we were told that the members decided to transfer another 12,000 of profit to the general reserve. So now that amount will have to be taken from the retained earnings column and be recorded as positive under the general reserve. Then after we had no revaluation of the land and building during the year, then we skip that as blank as is. Then after we have distribution of profit. Remember, with regard to the distribution of profit, we had to add two amounts. 115,200 was the total of the two. 115,200 was the total of the two amounts. Remember, there was a final distribution and there was also an interim distribution. Now I said take into account that entry. Number 3 said that is not number 3, or that is number 4. Number 4 tells us that we must provide for a final distribution of 57,600, and in the trial balance there was an interim distribution of the same amount, 57,600 rands. So now if you add the two amounts, that will give you the total distribution. If you say plus 57,600, that will give you 115,000 rands 200. So now that is where the amount of the distribution of 115,200 is coming from. So now remember, a distribution must be recorded as negative because cash is taken out of the retained of the business and it is distributed to the members of the closed corporation. Then after we can have the balances at the end of the year, then this will be 480,000 rands. Then nothing under revaluation reserves, and under the general reserve column will have 90,000 rands as the total, and under retained earnings will have an amount of 106,000 rands 740 rands, and under total will have 676,000 rands 740 rands. So now that will give us the total of all the total columns after we have taken into account all the amounts accurately. So now with that, this brings us to the third requirement. So this was requirement number B. So now this brings us to the third and the last requirements, being transaction with members, where we deal with the transactions that were between the closed corporation and the members of the closed corporation with regard to the incomes and the expenses, not taking into cognizance of the liabilities or loans that were between the members. We only focus on the incomes and expenses here. Please, student, do not forget that. We only focus on the incomes and the expenses here. So let me just write it here. Incomes plus expenses. We only focus on the incomes and the expenses, nothing else. There's no loan that appear here, and there's no any other thing that must appear here. Then after now we know these are the normal expenses and the incomes that are between the closed corporation and the members. Not to say you might not get others, but these are the popular ones. We have salaries that were paid to the members, and the amount of the salary that was paid to the member is a salary that was paid to only one member Gauta, being 72,000 rands. I just came to this adjustment because I know that in this entry number 3 I was told that the following amounts were paid to the members. The following amounts were paid to the members, and it says member, that means all the payments that were to the members are recorded in this table. So now hence I just came straight to this table or to this adjustment. Then I have to record 72,000 rands to Gauta in terms of salaries. Then nothing, this will be 72,000 rands, and it must always be in brackets because that indicates the outflow of cash from the close corporation to the members of the close corporation. Then after, we have to look at the interest that was paid on loans. So now interest that was paid on loans, there's only one interest that was paid to member Cheddar, and member Cheddar received interest of 10,800. It means the close corporation paid 10,800 to member Cheddar. So now that will be recorded as negative, indicating outflow of cash. Remember, we record all the incomes as positive, indicating inflow of cash, and all the expenses negative, indicating outflow of cash. So now a payment of the interest to Cheddar will be recorded as negative 10,800 rands. That will have to be negative 10,800 rands. Just a different color there. Negative 10,800 rands. And that was the only interest that was paid by the close corporation. Then after, we look at the interest that was received by the close corporation, and I think there was an interest of 9,600 that was received from one of the members. The adjustment number 2, and this is supposed to be adjustment number 4, not number 2. This is supposed to be 4, 5, 6, 7. So now adjustment number 4, which is adjustment number 2, initial entry, say that interest of 9,600 was received from Adam during the year. So now that is the interest that was received from Adam. Therefore now that will have to be recorded as positive 9,600, interest recorded under Adam 9,600. Then under this member there was nothing, and under this member there was nothing. Therefore now this 9,600 must be positive because it indicates the inflow of cash to the close corporation. Then the last one was a commission that was paid, and there was a commission recorded for not one member but 2 members received a commission. So now the close corporation paid a commission of 18,000 to member Cheddar, and the close corporation again paid an amount of 12,000 rands of commission to member Adam. So now we must record those two, 18,000 and 12,000, in as negative, indicating outflow of cash from the close corporation. So now that will be recorded as negative 18,000 rands, which is a commission, and a negative 12,000, which is also a commission. For the last member, we don't have any commission to record because there was no commission. So now I always say that whenever there is a total column that we have to account for, then you can just write the total amounts under the total column. However, based on the requirements of this exercise, I have just completed everything that was required of me. On my side, thank you. Hope you enjoyed this video. Thanks. Good and bye.